What is Murabaha and how does it work in Islamic banking? Have you ever wondered how Islamic banking works without the use of interest? One of the key methods is called Murabaha. This is a popular contract in Islamic finance that allows clients to purchase goods while adhering to Islamic law. So, how does it all come together? Murabaha is essentially a cost-plus-profit sale. In this arrangement, an Islamic bank or financier buys a specific commodity or asset for a client. The bank then sells that item to the client at a marked-up price. The client can pay for it immediately or over a set period. This method avoids interest, which is not allowed in Islamic finance, by structuring the transaction as a sale instead of a loan. In a Murabaha contract, the bank must be transparent about the original cost of the commodity and the profit margin added. Before selling to the client, the bank must take ownership of the goods. This means the bank is responsible for any defects or delivery issues. The sale price is agreed upon upfront, ensuring both parties know what to expect. The process has two main steps. First, the bank purchases the commodity from a supplier based on the client's request. Next, the bank sells that same commodity to the client with a deferred payment plan. The client commits to the purchase, but the bank takes on the risk if the client decides not to proceed after the bank has made the purchase. Murabaha financing is often used for short to medium-term needs. This can include buying raw materials, machinery, or finished products. The payment terms can vary, ranging from a few months to several years, depending on what is being purchased and the client's financial situation. From an Islamic finance perspective, Murabaha is acceptable because it avoids interest and involves a real sale transaction with clear costs and profits. However, some scholars see it as a secondary financing option, preferring profit-and-loss sharing contracts as a more ideal choice. Still, Murabaha remains the most common form of Islamic financing due to its straightforward nature and compliance with Islamic principles. In practical terms, Murabaha allows Muslim clients to finance their purchases without resorting to interest-based loans. It aligns financial dealings with Islamic ethics and legal standards. It is essential that the contract is executed with actual buying and selling of goods, not just as a cash flow arrangement, to ensure it meets Islamic law requirements.